In the next 15 minutes, I'm going to show you how to get hundreds of thousands of dollars of working capital for your business. My name's Colin. I've been doing this number of years. I've serviced over 3,700 other business owners in this exact same capacity. This right here is my own stack of working capital. So, in this video, we're going to cover the last 2 quarters of 2024, and it is critical that you start maximizing your funding now. In this short video, maybe 15 minutes, we're going to cover what does a good credit file look like for funding. We're going to cover how to set up your business in the appropriate fashion so banks want to give you money. Next is how to establish and build out what is called business trade lines. This will directly impact and increase your business credit scores. Next, I'll show you how to establish and build banking relationships so that banks want to seek you out to give you money. And then lastly, all this concludes into a precise funding protocol that I do with all of our clients. This entire video has given you the purpose on getting working capital for your business. Since these are the last couple of quarters, the last few months of 2024, it's critical that you start implementing these practices now rather than waiting. It is scientifically proven. Many studies, consumers like you and me will end up spending more money at the end of the year versus the last few or the first few months of every single year. So now it's your opportunity. Get access to OPM, other people's money, to capitalize and reinvest back into your own business to maximize as much profit as humanly possible. Right here, I have what's called the triangle of funding. Each quadrant here cannot operate without the other. So the first one is credibility. Credibility is essential because if the banks can't trust you, they will not lend you money. You build trust with yourself and in the eyes of the bank by making sure that your credit profile, personal credit profile, is well established, including the way how your business is structured. Because these are the main two components that a bank goes off of when you're asking for money for them. The next component has to do with relationships. What I have here falls under business bank accounts, who you know. This means making contacts directly within the branch that you're setting up this business bank account with, and then money to back up approvals. This means whenever you open that business bank account, you want to deposit a little bit of money. The more the better, because this is money that's just going to simply sit in the account while you're getting in preparation to submit your applications for approval. By doing these two components, that's what allows you to go into the actual process, which is the funding protocol. Okay? We have to do this now because all it does is it yields you securing more revenue for your business. So the first component I want to cover with you is we have two options here. We have great credit and bad credit. First, I'm going to talk about great credit. The first one is if you have a 720 plus credit score, you have aged personal credit accounts, you have a diverse file, meaning more than 2 or 3 or 4 different credit accounts. You want you want a credit file that has a lot of diversity, a lot of older accounts. If you don't have access to any of that, or maybe that's just not you, maybe you're younger, you get what is called authorized users. Go into Google, type in authorized user marketplace. You will find tons of options. Quick rule of thumb, when I'm working with somebody and I'm suggesting they get an authorized user, this is when you pay somebody and they add you onto one of their old credit cards. So all of the history, all of that good data will directly port right into your credit file. But you want to look for something that is more than $20,000 and then 4 years of age. Do these two components on an authorized user, and you will literally see your credit score take a huge boost, especially if you're having a hard time with credit card usage. Because if you have $30,000 of usage on $50,000 or $60,000 of availability, you're at 50%. Well, if you add another $50,000 authorized user account, well, now your 50% now goes to 25%. Your score is now good enough for a lot of lenders to take a bite off of that, meaning give you approval and access to working capital. Um, I have right here, you'd lend to yourself. I have that highlighted. That's a perfect rule of thumb. If you wouldn't lend money to yourself, that means you got some work to do. Now, this is an example of a quote unquote bad score. Is if you're under 680, all of your accounts are newer. Now, when I say newer, I'm saying like less than a year old, less than 2 years old. You want older accounts, and that's where the authorized user can come into play. A light credit file, meaning you only have 2, 3, or 4 accounts, maybe 2 credit cards, an auto loan, and a personal loan from Fingerhut or something along those lines. You want a diverse and dense credit file because the more in depth it is, the more the lender has to go off of. Score, I guarantee you, is not everything the credit bureaus look for, or not the credit bureaus, but what the banks look for. It's what's in the credit file. I have had clients that were a 750 plus credit score but had a light file, had a hard time getting a lot of approvals. While on the other hand, I've had some clients that were a 690, tons of years of history, a dense credit file, and they got way, way more than the other person that was a 720. So it's just not the score. Now for usage, as you notice here, I have under great score, I have under 10%. You don't really want 0% because the banks want to see that you have a pattern of spending money. Okay. You don't want to have no money out there whatsoever. Even if you're at the time you're watching this video, all your credit cards are zeroed out, put a little bit of money on them. Let's say if you have $40,000 of availability, put $1,000 usage spread across your accounts. It will help you get better and more approvals. Sub $10,000 limits right here. Again, we want to see banks want to see higher limits, and that's where the authorized user again comes into play because they can base a lot of the approvals on the business credit cards based on what your limits are on the personal. So this just does nothing but not only maximizes approval, but also how much they're going to approve you for. And then here is the silent killer of funding: inquiries. If the bank knows you're shopping for money, they don't want to give you any. So rather, if you have too many, and a good rule of thumb there is if you have more than 3 hard inquiries within the last 6 months of you trying to get funding, maybe you need to work with a credit card company or do some of your own due diligence and research to get them removed. If you're sub 3 over 6 months, you should be fine with the majority of lenders. Okay. Next is, how is your business set up? I'm just going to kind of rapid fire these, and I'll explain as I go. Do you have an EIN number? You have to have an EIN number. I don't care what videos you've seen or what YouTube videos you've seen or trainings you've taken. If you don't have an EIN number, you're not really going to get access to working capital. Okay. So it's free. Go to irs.gov, apply for an EIN number, then go to the Secretary of State where you live, and then fulfill the paperwork for your LLC. It'll take you an hour and a half to do everything. And to get the EIN number, it's free. You might have to pay a fee for the state, but it's worth it getting access to working capital for a business. Do your documents match? This would be, does your address match on all your paperwork? Does your phone number match? Do you actually have a business email? Not jimmyjohn@yahoo.com or gmail.com. You want to have it where it's your name at yourbusiness.com. Easy way to do that. If you don't want to sign up for G Suite or one of these other services for a business email, you buy the domain, you set up the alias as your name at the business, and then you set up a forward. So if a lender or somebody emails you to that, it'll get sent to your personal email box. Fastest and efficient and cheapest way how to do it. Okay. Do you have a website? A website's not critical, but it's good if a lender does their due diligence and maybe wants to look you up. You want to have some kind of presence on the web to indicate that you're an actual and legitimate business. Back to the documents. You never ever want your EIN paperwork saying something different from your state paperwork. That is a huge no-no. You will get nothing but declines. You might get an approval here or there, but if you're not taking that extra 15, 20 minutes to make sure everything's dialed in and matching, you're just shooting yourself in the foot. You're doing yourself a disfavor. Okay. And if you said no to any of these, I would highly recommend that you pause it at this point, review what I have written here, and double check and do your due diligence. Next, do you have a business phone number? Go to Grasshopper, go to Google Voice, get something other than your cell phone, right? Don't put your cell phone number as the business number on any kind of applications because, again, it does not bode well in the way of confidence for the lender to want to give you money. Okay. They care about risk, and the more risk you're bringing into the situation, the lower chances you are getting approved. Now, how old is your business? If it's over 6 months, you're good to go. If you're under 6 months, you might consider an aged corporation. Again, just like the authorized user, type into Google aged corp or aged corporation. There'll be a ton of options on there. Essentially, what you're doing is you're buying an older business. You're spending, maybe $1,000, $2,000, depending how old it is, but you're spending a little bit of money to get the EIN number and everything else for an older business that you can then even rebrand, rename, make it your own because it's about the time the EIN number has been established. All right. If you can find one that's relatively cheap, that's a couple years old, that's even better. This right here is the second line of defense that banks have, making sure that the business that you're trying to get money for is set up right. And if it's janky and it's all over the place, don't even try to get funding yet. Fix it, then try. The first line of defense, of course, is going to be credit. Then the business structure is going to be second. Now, let's say we've done both of those and you want to start getting some business credit established. First thing you're going to do is go to Dunn's or DunandBradstreet.com. You're going to apply for your Dunn's number. It's free. They're going to try to upsell you for some expedited delivery. Don't waste your money. It's not worth it. Apply for your Dunn's number. Once you've received your Dunn's number, again, go to Google and you can type in Tier 1 business trade lines. Think of it like a Macy's card, but for the business. You're going to have an account. Sometimes you'll have a physical card. Sometimes it's just an online merchant, like a vendor account with different services like Grainger, Uline, Amazon, Costco, Sam's Club. These are some examples. But you want to get Tier 1s first. These are the starters. Very often, you don't even have to use a social. It just uses the EIN number. So you're going to get 3 to 5 of these to start. You have to use them. This is where reporting diversity is key, but also reporting is key. The reporting occurs on a trade line after you've used and paid off the account. By doing that, you can then graduate or elevate yourself to Tier 2, repeat that same process, then you go to Tier 3, repeat that same process. At this point in time, you will have a fantastic business credit score. It gives the lenders and banks another way for them to approve you. They want to give you money if there's not a lot of risk associated, and the more benefits you're providing a lender when they're trying to make a decision, whether if it's the automated underwriting or a physical person that's underwriting that application for you, the better of a position you can make yourself, the higher limits you're going to receive, and the more approvals you're going to receive as well. Next is going to be establishing banking relationships. Now, I'm going to give you 2 brief examples. We have a relationship bank and we have a non-relationship bank. So a relationship bank means they want to work with somebody that's already a customer, that's already doing business with them. So if you have a business now and you have a business checking account, what I always recommend to my clients, and I recommend it to you as well, use that for your first funding round. Use them primarily because you've already built that relationship. You don't have to open up another account with somebody else quite yet. You will eventually, but not right now. Leverage that. So relationship banks are going to be Chase, Bank of America, Wells Fargo, nearly all credit unions like Truist. Truist somewhat. They like relationships. It's not required, but they like it. But PNC, Santander, you type in credit union, and I will bet you 90% of the ones that populate on Google from a credit union are member only for one, or you have to become a member, like a login just to apply for various products. So, credit unions, like I have, PNC, Truist, NFCU, Navy Federal Credit Union. Next, we have non relationship banks. These means they will provide you tremendous amounts of money in the way of approvals, and they never have had to work with you previously. Those are going to be American Express. That's my favorite. With American Express, you can get 6 products off of one hard inquiry. And you do that by you apply for a product from them, like this right here. This is the Platinum card. I got this card first. From there, I created an online account. Once I have an online account with them, I log back in and I can apply for 2 credit cards every 6 months. So I got the the American Express Blue Plus card and the American Express Business Blue Cash card, both business ones. I got both of those. Those now count for my 2 business credit cards in 6 months. But all their charge cards. So the gold, the platinum, the plum, and the green, those are all eligible for approval. So I got all 6 off of the one hard inquiry because once I got the first one, I created my account and I logged in. Once I log in, I don't even have to put my social security number in for the approval anymore because it does a soft pull from here on out. But other examples of non-relationship banks are going to be Elon Financial, FNBO, First National Bank of Omaha. I do have Capital One here, but as you see, I even wrote down they suck. In my opinion, they really do, and the biggest reason of that is because whatever business products you receive from Capital One, they're also going to populate that on your personal credit report. So be careful with that because you cannot hide utilization like you can with other business accounts. Quick little run through on a relationship style bank. What's the process there? So first, we want to open up a business checking account. We want to deposit as much money as possible. Take all the money out of savings, whatever money you can pull from that's cash, deposit that into the business checking account because you're not spending it. You're just waiting a couple of weeks to let the account season. That's what I call it. Because when you apply for that loan or you apply for that business credit card from them, if they see that you got 10 grand sitting in the account, well, they know, oh, we can give you $25,000 because we know you're good for 10 at least. So it bodes more confidence. That's why you do it that way. Next is, I highly recommend, I understand that for some people it's not going to be possible, and that's fine. The way how you want to do it is apply in person. If you cannot apply for in person, you apply over the phone. If you cannot apply over the phone, then you apply online. All right. But if you are able to do it in person, you want to talk with what is called a business loan representative. For Chase, that would be called a relationship manager. A different variety of names in almost every bank out there, but somebody that deals with business loans, that helps process business loans and applications. Whoever that person is when you walk into the branch, that's who you want to have the application filled out with. And you don't want to have it where they just sit with you as you fill it out. And you want to ask them, hey, can you help me fill this out and have it where you submit it for me? That is super important when you are trying to apply for business credit cards because, most importantly, when you do it that way, now the application is coming internally. It's not coming from online. It's coming from a representative that actually works there. Thus, it will give you higher approval amounts. Absolutely. Now, once you're approved by putting the money in the account, that's when I have it right here. Feel free to pull a bunch of that money out, save a couple $100 just so they don't close it. That way you can take the money, open up a new account, and repeat the process there. Now we're going to go start getting into our funding protocol. Okay. First things first, go through your credit report and find out how many inquiries you already have. Because, like I was mentioning earlier, if you have more than 4 inquiries within the last few months, stop. Don't try to put in a bunch of applications yet. Try to get some of those removed. Now, under the assumption that you have less than 4, you want to diversify where the inquiries are coming from. Essentially, you want to get as many approvals as possible for as little inquiries as possible. Now, by saying that, it's not just the play with American Express, but you don't want to get 5 inquiries just off of Experian and only 1 on TransUnion. That's a silly way to operate like this. Rather, you want to do it where you're getting, call it 2 or 3 inquiries on Experian, 2 on TransUnion, 2 on Equifax. Now you find that out, and I can't run through a list of everywhere where banks pull from because it also depends on which state you're in. So do your due diligence, go onto Google, type in where does uh, Chase Bank pull from in Mississippi? What credit bureau does Chase pull in the state of Mississippi? You will find some resource somewhere that will tell you that. Now, once you find an answer, continue searching until you find an answer from multiple different sources that say the same thing. From then, you can also type into Google what banks pull from TransUnion in the state of Mississippi or in the state of Texas, Florida, California, wherever it is that you're watching this video from. Do it that way. Find multiple answers saying the same thing, and then you can build a diversified funding round. From then, the best resource I can provide, time is everything when it comes to applications. So, this is a method for what's called a shotgun blast. What you would do then is you would open up, let's call it 8 applications. Oops. 8 applications. You will then go ahead and open up 8 different computer tabs. So you have each individual application pulled out in front of you. Now, some of these will time out. Okay, so maybe you want to look up some kind of application or something that prevents a web page from timing out. All right, because this is going to take a little bit of while. It's probably going to take you 20, 30 minutes to fill all these out. But the point of it all, if you have all applications opened up on 8 separate tabs, you will then want to fill them all out all the way to the point of pressing submit, pretty much all the way to completion. Because if you can click submit on each one of these applications within a few seconds of each other, now you might get lucky. This is not guaranteed, but you might get lucky that, let's say, all those applications for Experian will not be able to update, meaning they'll pull your credit. Okay, that's going to happen instantly. Whatever bank or application you pull from, they're going to pull your credit. That's going to be instant. But if you do it fast enough, they will not have enough time to then take that inquiry and report it back to Equifax to update there is a new hard inquiry. So the second bank that's going to pull from Experian will not see the first, the second, or the third, or however many inquiries you're going to put there. They won't see that update yet. So each application will go off of however many you started initially. All right. So it's difficult to do, but if you don't feel comfortable, you think you're going to mess up, don't even try. All right. But particularly if you have 2 or 3, maybe 4 applications that you know that you can fill it out and then go back and wiggle your mouse so it doesn't time out. In short, this doing it as shotgun blast is one of the most effective ways how to get a lot of inquiries out with minimal hard inquiries impacting the approval. Now, if you're not going to do it online, but you have the opportunity to leverage those relationships first, do that over everything. Do it in person, like I said earlier, with one of the business bank representatives there within a branch. Use banks that don't need a past relationship. Kind of was mentioning that earlier. First round, use whatever relationships you've already established leading up to that point. Use American Express, Elon, FNBO, use those. That's going to be your first round. And then whatever applications, like, for example, American Express, Elon, all those guys, since it's not relationship based, feel free to do those online. That's not a problem. Now, apply in person if at all possible, and then make sure that you're hitting approval data points. All right. Now, that's where the good credit and bad credit conversation comes into play. So you want to make sure that, again, some very quick and simple Google searches could probably yield you the answers you're looking for of how old accounts do I need, what kind of credit score do I need. And the reason why I can't give specifics on, say, well, I can on Chase, is you got to be above a 720 for all their ink products. You got to be above a 720. You cannot have more than five credit accounts within the last 24 months. That's their 524 rule. They want you to have some kind of relationship established for high limits. You got to have that. You can't have late payments. You can't have more than 4 inquiries in the last year. Um, and you got to have some data for them to go on behind, meaning time in business, something along that. Those are the data points for Chase. But if maybe you're not going to use them, do your due diligence and find the appropriate options for you to do your first funding round. Now, down below, I have 2 additional videos posts underneath this. One is if you started watching this and you have bad credit. I have a video specifically talking about what you need to do in that case. Essentially, if you've tried to get funding before and you've gotten a lot of denials, I have that video that will show you exactly what to do. I have another video that will show you in a 43-page document a lot of this information, but elongated and further highlighted. Go to that video. And then additionally as well is if you've heard everything I'm talking about, you want to get funding, but you think it's too big of a hill for you to climb, join one of our 3,700 other clients. Allow us to proceed, bring our relationships, bring our knowledge, and walk you through step by step throughout the entire process. I'll see you next time.